Bring in portfolio manager at eNCA Capital, Martin Smith. He's been watching today's markets movements and he joins us now. Martin, let's start with the local currency. I mean, the Rand had a few things in its favor this week. It lost a little bit towards the end of the afternoon, but still hovering around that 14.10 to 14.15 to the US dollar. But as always, it's a volatile currency, wouldn't you say?
Volatile is absolutely the right word to use. So, I mean, on average, the Rand moves, call it R2.50 against the dollar every single year, just to put into perspective about how volatile it actually is. And I think we've seen some call it dollar weakness after the kind of Jackson Hole comments that came out about 2 weeks ago. Basically, the story there was the Fed said that they were going to keep interest rates lower for longer, which obviously led to a weaker dollar. But then I think the big thing this week was the ECB deciding to start their tapering program, just starting it a little bit and starting to kind of buy less bonds and kind of pull the QE kind of lever a little earlier than the US. So you've seen essentially a weaker dollar on the back of that. You did mention that obviously we've had a current account surplus, which means that foreigners are kind of net buyers of Rand, which is also very positive. But I think the big thing is the fact the ECB moved first against the kind of US in terms of their tapering. So yeah, it's looking pretty good at 14.10. Does it have legs? I think potentially from here, like I said, when the market starts to also digest that current account surplus, I think that's also quite a nice positive.
Now, Martin, we've been focusing on the tourism sector today here at eNCA. We can see the sector getting more active as we approach the end of the year. Well, we hope so, as vaccination rates improve. One company, City Lodge, would like to see that happening. It's released a bit of a gloomy update, though, today. Am I right?
Yeah, gloomy, but, I mean, pretty understandable, right? I mean, they're essentially in the eye of the storm. I mean, it's hotels across South Africa and Africa, right? So in a world where things are locked down and travel restrictions and people aren't obviously staying in hotels as much as they would be. So they said that they're going to have a headline earning per share loss of 88 cents to 93 cents for the full year. Still better than they were last year. So there's a mild positive. I think in essence, this is one that if the world recovers and we see a kind of flow through vaccinations, numbers kind of getting better from a COVID perspective and the kind of economy reopening, which I think is all of our base case, somewhat in hope, I think, as well, then this is one that will absolutely benefit. And if that's the case, the share will do really well, but obviously comes with a health warning because we don't know. We don't know how vaccination programs are going to work, Delta variants and. But I think if you are kind of positively, also cautiously optimistic on a positive outcome for that kind of scenario, I think City Lodge has got great optionality from that perspective.
And then anyone holding Process or Naspers shares would have been in a very uncertain times now, would be in that uncertain bunch. I mean, the ups and downs in Chinese regulation of the tech gaming sector. So it really has been a roller coaster for those shares this week, hasn't it?
Yeah, and it was so frustrating. Sorry, you can see the frustration quite literally because it seemed to bounce quite nicely off that 2-4 level Naspers I'm talking about here. And we hadn't had any kind of news from Chinese regulatory bodies. And it seemed like things were starting to get quite positive on that front. And then we got the news out kind of middle of the week, and then you saw Naspers down, kind of call it 7.5% to 8% on the back of news around 16-year-olds and kind of restrictions on hours of playing. And then there was also talk of like a freeze on gaming, which they have subsequently kind of revised to say that it's a slowdown on new gaming releases. So that's all kind of dampened the sentiment. I mean, but if you look at Tencent, which is kind of the big underlying investment in Naspers and Process, only 3% of their kind of earnings revenue comes from gaming or people playing games under the age of 16. So it's not a massive from a kind of earnings perspective, but I think it's almost like this continuation of just this rhetoric of more and more regulation and where does it stop. And the one thing that made me quite nervous is for the first time you saw a comment around them saying, or the Chinese government saying that they should stop making games based around profits, because I think it's a bit of a trying to reset things in terms of society and what people do and how they play and things like that. And when it comes to them trying to impact profitability of companies and they're making games, that does start to make me a little nervous. I still think to capitulate here would maybe be the wrong call. I think you've got to kind of be brave and just hold the line and just wait for this kind of cycle of regulatory kind of rhetoric to play out.
I see. So, portfolio manager at eNCA Capital, Martin Smith, thanks very much.
Thank you.
Indeed, for those market insights. So, the market, big news on the market was that rand strength, of course, but did take a beating from some of those mining shares as well. Let's